Hello, Baker Investment students. I'm Joe Barnhill, be your instructor for the next 7 weeks in our investments course. So I want to say that I'm looking forward to working with you all beginning of this new year in 2020. So today is Friday, January 3rd. So in the future, I'll probably post these on late Saturday or Sunday to kind of give you a preview of things to come for the week. But this first one I'm just posting a little bit early. I got a lot to do this weekend. And also, that it will give you some insights of, I want to give you some insights from the syllabus and also some things to think about for week one. So first, just a little bit about myself. I've been with Baker for about 25 years now, teaching economics and finance. I really enjoy it. I had worked in the corporate and finance world and found my way into higher education. So currently, I'm a student success manager at MCC Longview in Lee Summit, Missouri, but also try to stay active in finance through nonprofit organizations by the College Reading Learning Association. So I do treasury work for them. But I really enjoy finance. I enjoy economics, investing. So what you'll get from this course is obviously some about the principles of investing, but also a little bit about my philosophy as we go along. So starting off, just the end of the year was a great year for the markets. Finished up quite high, and that was because of the economy doing well, and also the Fed rate cuts. We had over 3 rate cuts. Amazon said it was one of the best years ever, and hopefully 2020 will continue that way. Of course, with the drone strikes with Iran this morning, there's concerns with oil and the price of that going up and how this might have impacts to the economy. So we'll have to wait and see. The Dow's down maybe close to 1% a day, but it's still at a record high. So it's done quite well, and hopefully will continue to do well this year. So hopefully you all have this in the electronic book that would be the fundamentals of investing. That's the book we're going to use throughout the course. In the first week we'll look at chapters 1, 2, and 3. But I want to start off just going over a little bit of the syllabus today, and I just had some notes here. But I usually try to check email daily, so I'll try to get back to you that day or the following day at the latest if you do have a question. If you do have questions, do ask them. That is important to stay on top of that as a graduate student. And I have my phone number there, but best to get a hold of me via email. With this course description, course objectives, there's a way we can approach this from either the personal perspective or I would say from an organizational perspective. I'm a big believer in modern portfolio theory. The idea is that hopefully you're making rational choices throughout your life. I see those Peloton commercials and it makes me think that these people are probably buying these things and then it's going to sit in their room for the majority of the year. They have this huge payment that they're making every month to it. Now, if you're using it all the time, great. But a lot of my economics background says that we have the choice to consume, the choice for work, and the choice for leisure. So really, when you're investing, you're thinking about how am I going to improve my standard of living, or how am I going to improve the position of the institution, whether it's a company, whether it's your church, and what risk am I willing to take on. But ideally, you'd want to kind of be going this way, kind of constantly moving up and not have these big swings up and down in performance of your standard of living over a lifetime. So this course really gives an overview of all the different investment types, how to invest, and some strategy and philosophy about that too. But again, regardless, I encourage all of you. One thing I would say definitely from out of this course is if you're not doing this now, do create a net worth statement. They're available online. I'll try to throw one out there, just a basic Excel one. Definitely engage in budgeting. This is important. And to a lesser degree, you can kind of track cash flows and tax planning. But for investments, regardless if you are the one doing the investments at the company, most of you will probably never be in charge of that, but you may oversee that. In the sense that, hey, we need to let that person know that these are what is acceptable investments and that somebody is auditing that person. And as you'll see in this textbook, there's been all kinds of mistakes throughout history and bad decisions that are made. I remember in the 90s, I think Orange County, California, got mixed up in some derivatives and it almost made the county bankrupt. So from your personal perspective or an organization's perspective, even if it's for the church, who's in charge of the church's money, what are the allowable investments, what type of risk are we willing to take on? And certain institutions aren't able to take on certain risks. Where I work at a community college, Jackson County, they set very definite investment guidelines, and it's very restrictive, basically CDs, money market accounts and such. We can't take on other types of investments, even though that may give us a greater return. We have to be accountable to the board and those that are in the community to make sure we're making good decisions. So, all right, some things I just want to cover in the syllabus to go through. You will have the weekly problem sets. I put the key out there for all the problems. If you have any questions, do ask. I'd say ask me though, by Saturday at the latest, because you're waiting till Sunday. You may not get a response in time. But I'm really looking for the quality of your effort and work. If you're making a good attempt at it, you're showing me how you arrived at the answer, you're going to get the points for it. If you're missing problems, that's where you're going to be losing points. The journal article analysis, I'm kind of excited about this. This is more exploratory. What I mean by that is I don't expect you to understand all the math that are in these journal articles. Some of this is going to be pretty complex. I do want you to pick something out that you might be interested in learning more about, something maybe tied to that week's material. But I leave this pretty open, and probably in the week when we get there closer, in that week, I think week 3, we have the first journal article analysis due. I'll put a forum out there that you can post what article you're going to do, and that can let me know, and I can say, yes, this is okay for you to review this article. But I really want you to kind of explore the research process. We look at research. Most of us are not engaged in academic research, but you are engaged in workplace research. Ultimately, you're asked to deliver something. You're trying to make decisions, and you're trying to base those decisions on data. So to get us in a graduate level mindset, I want us to really start looking at journal articles and see how those in academia with finance or investing, how they think, how they process. So I want you to write a summary about this, and there'll be more details in the syllabus. But what did you learn for this? How can this be applied? And of course, make sure to use MLA or APA. I know that Baker's moving towards APA, but I'm allowing either way. But just the important thing is that make sure you're citing resources. So obviously the authors that wrote the journal article, or if there's any other sources. But we ask you in graduate level writing, definitely cite those sources. So reference page if it's APA, a works cited page if it's MLA. And if you have questions on this, you can let me know as you approach this. But I've also put some sources out there, Purdue OWL, in the beginning of the Moodle to help you out with some sample APA and MLA papers. We'll have 2 exams in this course, I believe week 4, week 7, probably multiple choice, maybe some essay, and then the forum discussions, the main thing I want you to be doing every week. This is where I want you to be engaged with other students. I want you to post by Thursday. Make sure to reply to at least 2 of your peers, see the forum discussion rubric on this. And I would say, especially what I want you to do with your peers, we have a good sized cohort, so this is good, is to mix it up once in a while. Maybe if you respond to John next week, you respond to Mary the following week. So not necessarily get in the habit of just responding to the same people all the time. And this is a really good opportunity where we learn from each other with the forum discussions. So it's one of the best parts about active learning in an online course. So of course for this week 1, which you read chapters 1 through 3, you'll have the homework problems from chapter 1, 2, and 3, and of course the forum discussions. So, and with the forum discussions, I try to jump in there and engage as much as possible. So I may not get to everyone every single week, but I do try to get in there and try to move the discussion along, or kind of provide some additional thoughts as we go through this discussion. So that's a summary of the syllabus. Like I said, this week the mini lecture will be a little bit longer. Following weeks it will probably just be about 10 minutes, but I want to cover some things with the syllabus, give you some more clarification. With the chapter materials, this week with chapters 1, 2, and 3, I just want to go over some of the key concepts with you. And first, that first chapter, chapter 1, talked about the difference between a direct and indirect. Most of us do indirect through our mutual funds, whether it's 401k at work or a 403b plan. There are some that do buy stocks directly. I have an IRA where I can buy the stocks directly. But difference between short and long term, you think about short term, what we call like a money market, anything that matures in 1 year or less. This is typically what I would call consist of treasury bills, could be repurchase agreements, commercial paper. So these mature in less than a year. Now anything that is long term, what we call capital markets, that's anything that would mature greater than a year. We typically think of stocks, and long-term bonds would fit in this category. The idea here, I think one of the most key things in this chapter, it talked about writing an investment policy statement. And this is, as I said earlier, you may never be in charge of actually doing the investments in your company or for yourself. I kind of have a philosophy today that it's easier to do investments on yourself, but especially for a corporation or organization, again, I stress it's so important that you set the guidelines of what are allowable investments and what is the philosophy of the organization and what our constraints exist. What does the law say that we're allowed to? Or if there are bond indenture agreements that says that, hey, we cannot do these certain types of investments, so especially the riskier type of investments. So you need to be aware of that, and you need to have somebody oversee that. Make sure somebody's auditing it. So whether it's a small church organization or it's a large corporation, the philosophy is the same, that you make it very explicit about what are the allowable investments and what are the allowable risks. And of course, this time of year, we're all thinking about taxes too. So my philosophy is that tax avoidance is good, tax evasion is bad. So we don't want to go to jail. We don't want to be in trouble with the IRS, but we do want to be smart about how we're investing and how this impacts our strategy. For example, I have a 17-year-old, so this year I lose the child tax credit. So I probably will be adding more to my IRA to reduce my tax liability, and I can do that up until April 15 of 2020. So I have to think about the trade-offs of doing so, and even if it behooved me to borrow some money on my home equity line of credit to do that in order to minimize my tax liability. And in the last part of just this chapter 1, talking about careers in finance, I enjoyed my career in finance. I'm mostly in academia now, but it can be a very rewarding career. It's always something that's going to be needed. So I know some of you may be in finance-related fields, so it's interesting to hear about those stories a little bit, how that applies in the forum discussions. But know that it is something that if you're interested in that, there's all kinds of professional designations. I was a certified cash manager. That's my designation. There's CPAs, there's certified financial planners. This textbook follows like a chartered financial analyst. There's some questions you can kind of practice at the end. But if you are in this profession, I would recommend, some type of professional designation in your field, because it really sets you apart. And the firms recognize this when they're looking to hire individuals, when they see somebody that's credentialed versus someone who is not. In chapter 2, it talks about security markets and transactions. It goes through the process of the primary market when a security is initially issued. This could be a stock or bond. Most of the attention actually goes to the stocks, even though bonds are probably just as equal. It's not as flashy. So but a lot of companies raise money, a lot of governments raise money through bonds. But essentially, you have what is known as an underwriter, and they work with a syndicate of firms to go out and sell those securities, and you learn about the IPO process. And some of this may be a review from a previous class. But then it also talked about the secondary, and that's what we hear about in the news most of the time. So we hear about, after, once the company gets the money and they issue the IPO, they want to try to maximize that price. In fact, the textbook talked about that a lot, about the underselling it a little bit. Like if the next day you did an IPO for $25, the next day it's trading at 40. Well, the firm doesn't get that money. It's the secondary market, so they kind of missed out. So those that did all the due diligence and tried to price the security, obviously they're going to price it for the investment firms where they can make money, but the company may say, hey, we missed out a lot here. You didn't price this according really to what the demand was in the market. But the secondary market is what we hear about in the news a lot. And this is where I really encourage you to, during this course, I know this goes so quickly, but try to pay more attention to financial news. I know PBS, I think they do a nightly business report. I put a website out there, CNN Money. That's probably one that I check daily because I think it's just a great resource. But it gives you really a pulse of what's going on with the financial markets. And that's something that I want us to do throughout this course. But again, they talk about the broker and dealer market. A lot of consolidation these days in these markets. I remember the Kansas City used to have the Kansas City Board of Trade. We don't anymore. And that's because we've just consolidated a lot of things, and now it's all done through Chicago. But a lot of that's due to economies of scale that I can do it at a lower per average total cost. And you'll read this in the readings about the consolidations of all these different networks. Last thing is just wrap up with some things with Chapter 3. Talks about information. And the one good thing about the advent of the internet is information is available everywhere. I remember when I first came out of college in the late 80s, I thought I was going to be a stockbroker. And I took a different path. But these days, it's a question. Do I really need? How much do I want to pay somebody for information? This information is available, but again, it's that idea of the risk versus reward. And obviously, as things get more complicated, as you're dealing with taxes and perhaps setting up estate planning and thinking about risk management and all those things. Maybe sometimes it does behoove you to go out and seek professional help. But I would argue that a lot of the stuff that you can do on your own these days, and I went to graduate school at the University of Central Missouri to get an master's degree in economics, and I swear that the same words that they told us in the early 90s still holds true today. Really, if you just put your money in S&P 500 index fund, there are not many professional money managers that can outperform the S&P 500. So when you're given all these choices and different investment decisions at work or your own investment decisions, most professionals can't beat that standard. So, it's like, does it really pay to get a lot of this information and advice from someone? So the textbook talked about the different range, from the full service to the discount broker, like a Merrill Lynch to an E-Trade. But today, it's so blended that it doesn't really exist anymore. Even the high brokerage offer discount products and services. So it's become much more competitive. And it's all about trying to get the money to their particular firm. So you're going to read a lot about that in this chapter, and you're also going to read about the Dow Jones Industrial Average. Interesting, the Dow Jones Industrial used to be all railroad companies back in the mid 1800s. It was actually three guys, but the third guy, the name was too long, so they cut it off. So it's just Dow Jones. In fact, that guy, unfortunately, in history, because he was the last name listed, never has been be able to be compensated for that, starting that company. But anyway, you're going to learn a little bit about the market orders, limit orders, stop loss orders, way we can put things in place to maybe take advantage of gains or avoid potential losses. But again, main thing is that once you go through this course, get a really solid understanding of the different types of investments, different types of strategies, and participate actively in the forum discussions. And if you stay on top of things, you'll do well in this course. But again, if you do have questions, do email me. Again, I said this week the mini lecture is a little bit longer, but following weeks I'll post these on Sundays, and they'll probably be just about 10 minutes to give you some insights that week. So otherwise, I look forward to talking to you online, and we'll start the class off on Monday. So have a great week and take care, and we'll talk to you soon.